down 36.5% in 2022. Is Li Auto stock a buy for 2023? The Chinese EV company is expanding deliveries and doing really well. So let's see if the stock is a buy. The first thing I'm going to look at is its quarterly revenue growth. And of course, it was exploding right when it started rolling out deliveries, and it slowed in more recent quarters up to it down to 13.6% in its most recent quarter. Of course, China's the largest EV market in the world, and the company is operating in the largest market with the most potential growth available. So for electric vehicles, the key has been supplies. Can you produce enough to meet the robust customer demand? And with rising competition, it's been harder and harder to secure the supplies that these companies need to make enough cars to satisfy customer demand. And this is going to continue being this problem is going to persist as all legacy car makers are now looking to ramp up production in electric vehicles. It's going to make the cost of goods sold increase. It's going to make it harder to make sales because now you're competing with so many other providers. And so I would not be surprised if revenue growth is pressured in the near term to medium term as it needs to grapple with growing competition, especially after the initial phase when it ramps up production, and that's explosive growth, and then it's going to settle down. Next, let's look at its operating income. Is it anywhere near profitability just yet? Is it achieving any kind of economies in scale, any demonstration of that? And it's too early for that for Li Auto. In its most recent quarter, it lost 311 million in operating income. It is generally losing money on the bottom line every quarter going back before 2020, and it's going to be some time before it achieves profitability. Remains to be seen at what scale it needs to reach to achieve profitability. Of course, the leading player in this field is Tesla, and its industry leading 25-26% gross profit margins per vehicle. All the other EV providers are trying to get to that level. And so let's see if it's making progress in cash from operations, and it was for several years. It was gaining and making more cash flow from operations. However, in recent quarters, it's starting to decelerate, and cash flow from operations is decreasing as the revenue growth has decelerated considerably. It was negative for the first time in the most recent quarter, 89.9 million in cash flow from operations. Next, let's see what kind of shareholder dilution the company is experiencing. And from before 2020, it had about 600 million shares outstanding. It now has 977 million shares outstanding, so a more than 50% increase in shares outstanding in about 3 years. That's a lot. And of course, shares outstanding matters to investors because when the company eventually achieves profitability, that means the earnings per share will be lower because there's more shares outstanding, right? So if $1 million is split between 5 people, that's going to be more profit for those 5 people compared to if those $1 million were going to be split with 10 people or 15 people, right? So the total profits are now going to be split among more shares, thereby decreasing the earnings per share potential for Li Auto. And that's why it's not very good to see this kind of shareholder dilution if you're an investor. Finally, I want to look at valuation, and Li Auto is trading at a price to sales ratio of 3.7. It's the cheapest it has sold for in its brief history. And but since it's not consistently profitable on the bottom line, I couldn't use the price to earnings ratio, and so I had to use the price to sales ratio. And so to answer the question, is Li Auto stock a buy for 2023? I'm going to say no, and for two major reasons. Number one, I don't like the competitive pressure in the industry. Competition is rising too quickly in terms of more supply coming online, more manufacturing facilities coming online. And recently you heard, if you're not aware, Tesla is announcing price cuts in its models in China. And just competing for the materials. I don't like when competitive pressure in an industry is this strong and getting stronger. And then secondly, I don't like the losses on the bottom line here and the shareholder dilution combined with the losses on the bottom line. So for that reason, I'm going to say Li Auto stock is not a buy for 2023. All right, thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.